please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Ashwani and Mitesh with us for BTST calls. Ashwani, you go first. On the index, you said you are taking longs home. What about individual stocks?
So on the index, people who are short should cover their positions, because from the low, Bank Nifty is rallied about 500. So this way, even in the next 15-20 minutes, we should close much higher, given the kind of short covering we are seeing. But on individual stocks, the best stocks right now are the financials, because chances of a bigger rally on financials is very likely. So Kotak Mahindra is a buy with a stop of 1150, target of 1225. HDFC is a buy with a stop of 1750, target of 1810. And Chola Mandalam is a buy with a stop of 1190, target of 1235. People can buy, L&T Finance, all kinds of NBFCs which collapse. I think everybody should have a 10-15% type of rally on the upside at least.
That's interesting, Ashwani. And of course, you noted your point about perhaps squaring off shorts on the indices. Is that too bold a trade right now? If someone's trying to buy the Nifty Bank and the Nifty itself, or is that not advisable at all?
Did not understand what is not advisable.
No, I'm saying, would you advise someone to be that sort of turn around that way to buy the Nifty Bank and the Nifty itself? You mentioned you would even buy NBFC stocks, but what about the indices?
Indices also, you're looking at least a 200-point rally on the Nifty. On the Bank Nifty, possibly, a 700-800 point move can happen, because look at the size of the decline. Even a 50% pullback, even a 35% pullback will be several hundred points. So my sense is that the pullback in itself will look like a bit of a move. So that way, the places where the most shorts are there, that is where the biggest short covering will occur. So don't carry short positions on financials forward, because you'll be surprised at the size of the rally.
Okay, fair enough. Mitesh, your thoughts and your trades?
Actually, I had a BTST in Oil India because it is coming close to pivot levels, I think, but it's already met the target of 220, so we'll avoid that. The other one is a conditional sell on MRPL. I think it's more of a STVT call. If it breaks 72, go short with a stop at 73, look for 69 kind of target. Okay,
fair enough. India is still not a buy on dips markets. That's the view coming in from UBS Securities. Let's now get in the author of this report, Gautam Chowcharia, MD and Head of India Research at UBS Securities. Gautam, good afternoon. So the obvious question, what would that level be? Or is there any other trigger that you're looking at before turning bullish?
So it's primarily the levels and valuations. So the level our fair value for Nifty for December 18 still remains 10,500. So any levels below that would make the risk reward attractive for buying Nifty or broader markets. The trigger in the near term could obviously be not just liquidity infusion, but some measures by the government and policymakers to give confidence to the broader markets, both in terms of liquidity as well as solvency issues around the various institutions.
Gautam, good afternoon. Surabhi here. So I'm reading out from one of your recent notes, and it's a bit of a dire situation that is being painted. You're talking about how Indian households' consumption has grown ahead of income for the last 5 years. The savings rate has gone down quite a bit. And therefore, now if NBFCs go slow on lending because of credit market issues, this can really, sort of cramp consumption in a big way. You're expecting earnings cuts as well. So pretty bleak outlook on the market as a whole, beyond recent issues.
So that's kind of captured in our 10,500 framework. We're looking at basically 18 times 1 year forward earnings, which are more reasonable rather than the street's optimistic estimates. But that household thing is hard macro data published by the government. It's a very unique period in India for the last 4 years where household consumption has grown much faster than household incomes. And this kind of gap has never happened in India's history. It's happened because of savings collapsing and obviously rising consumer leverage. And rising consumer leverage has been fed to a large extent by the strong growth we have seen in non-bank financials. So therefore, there would be some collateral damage unless we not only see the current liquidity situation being managed, but NBFCs going back to high growth phase fairly quickly.
So on NBFC itself, Gautam, is this an entirely avoidable area, or you think some stocks have now corrected to fair value, perhaps not fair value because most of them perhaps were in a bit of a bubble territory, but some of them have corrected to reasonable value, you think, or you would still want to avoid the sector completely?
So as a sector positioning, we are underweight on non-bank financials, but yes, there are stocks where even the current liquidity squeeze we have seen may not matter so much because they will still be able to access funding, and not only access, but they would have the pricing power to pass on any increase in cost. So there are individual names which after the correction looks even more interesting, but as a broad portfolio positioning, given the concerns and the shock which the system has got, we would advise still to be cautious on non-bank financials and not jump in a hurry. Again, there could be pullbacks in the short term, but it will take time before confidence really comes back on ILFS, the broader funding market, the debt mutual funds willingness and ability to fund non-bank financials in a bigger way, and even the banks lending to non-bank financials coming in back in a big way.
Okay. I'm just going to get back to the consumer point as well, because just even before the ILFS issue really hit the market full form, we had started seeing a drop in consumer stocks, and suddenly this valuation argument was coming back. It's nothing new. We've always known it. But the correction started even on stocks like Lever. How are you positioned on that part of the market?
So as an asset class or a sector bet, we are neutral on staples and discretionary. But again, you have to be very, very stock specific because the earnings outlook or the earnings visibility is actually quite dispersed across the sector. So while the valuations are rich across the sector, there are names where we have strong earnings visibility. So those names will be fine, but as a broad sector call, it's still a neutral call.
Okay. So that's on staples. And how would you view discretionary, some of the high flyers like a Jubilant? I know you can't get into stocks, but I'm just saying discretionary consumption, whether it is autos or some of the urban consumer plays.
So there should be some dampening effect, but it doesn't mean there's a big correction, because structurally what would really hurt consumption in a bigger way would be if income levels don't pick up or there are job losses, because the gap obviously between income and consumption cannot sustain for long term. In the near term, what we are trying to say is because of the leverage availability and cost of the leverage, that being tighter than it was say a few months back, that will at the margin hurt, but those will hurt companies where it's much more linked to such leverage rather than simple staples or discretionary.
Okay. The one obvious trade in the market over the last 6 months, in fact more than that, Gautam, has been to buy IT. In fact, even today TCS has hit lifetime high. But is this move now, perhaps getting overdone?
On absolute basis, we are reaching, I would say, fair value range for the broader sector. There are still stocks we like, but as a portfolio positioning perspective, it's still a big overweight position for us. That's what we're recommending to clients for a few reasons. One is the positioning is still not heavy; it's still quite light because the conviction level amongst most institutional investors on IT is still low. Secondly, the tailwind from currency is still not reflected in earnings, and stocks could further react based on that. And lastly, it also reflects a broader market view. When you're looking at 10,500 Nifty, IT is a sector which should outperform.
Okay. So just to come back to the basics, your December 18 target of 10,500, Gautam, we're still some distance away from that, not too far, but right there. So what could be a risk that's not been priced in? Could it be a rate hike from the Reserve Bank of India? I mean, what else are you looking at? What a day, who knows? Let's see Indiabulls Housing Finance. Well, 5 minutes to go, a little tough to see it close in green, but it's recovered almost its entire loss, down just 2.5%. Big recovery is the story of this closing hour. We have Shri Shankar of Prabhudas Leeladhar now joining in. Sri, we've had a couple of statements come in which have sort of engineered this kind of a sharp turnaround. You think the worst is over? Would you buy NBFCs?
I think the big question is, it's not a mere question of buying NBFCs. I think the conditions today because of where the rupee is, where the oil prices are, and where your CAD and fiscal deficit, etc., is going to look like. It's going to be a bit of a headwinds that we are going to see coming in from the quarterly performances of a lot of companies. So the big question going forward is, are we going to see a growth the way we have anticipated, or what else? And the mere fact of these NBFC rumors, be it started with ILFS, then we had the DHFL, etc., having this huge amount of volatility in the marketplace. What it will further lead is, what is the spread between the corporate bond markets and the G-Secs? Now, are we going to see a liquidity tightness from that side to a great extent to continue? And even if you don't see that, assume that things will be, these measures should help tide over the tightness that is going to be there, or that will be there in the marketplace. Then conscious decision from many investors, even to move away from any one of these names that you mentioned earlier, in terms of subscribing to their bonds and subscribing to the CPs, etc. I think we don't have an answer today. And this is in a very flux situation. So the market had gone down sharply over 1,100 points also in the 2 days. And today also it opened low. It has recovered from those levels. Is it calm before the storm? I don't know.
That's nicely put. Shri, hi, good afternoon. What about a stock like Maruti, where we have had one-way decline? In fact, the stock hit 52-week low yesterday.
I think the expectation from, we like Maruti, by the way, and it has been one of the topics also for quite a long period. And the kind of an underperformance it is, why Maruti? Even yesterday, you saw suddenly, 5-6% go from Mahindra and Mahindra, etc. So the point here is that it's not merely a Maruti or a Mahindra and Mahindra stock. It's more broad-based. We need to bear in mind that the kind of F&O positions which has been there with many of the broking houses from investors and the traders were quite huge. So with the market correction being what it was in terms of the sharp correction for 2 days, the margin calls would have been high and all those things. So till the time you see this getting settled, I would think that the volatility will be here. And if you actually see the kind of a strong inflow which has been there from the retail investors, be it SIPs, be it other flows into the capital market, into the equity funds, which has been pretty strong, if that slows down quite a lot, then it could be a different story. Mind you that we have still a large number of companies coming out with IPOs, be it in the private sector, be it in the public sector, for listing, etc. So I don't think supply of paper is going to reduce. Supply of paper is going to be huge. So I think it will be a cautious environment right now.
Okay, well, just about a minute to go before the day closes out. It's been a day of recovery, a 100-point move on the Nifty coming through. Anuj, I guess everybody's going to wonder whether this is going to last, whether this is a durable bottom or not.
You know, this is a powerful short covering bounce, as powerful as short covering bounces are. It will run into resistance at some point, obviously. You know, the point today is crude's at 82 nearly, and still the markets had a rally. And the context is we had a big decline, and just one or two statements were enough to scare the bear and just to scare the shorts, and that's led to this powerful short covering bounce. There were a lot of stocks which ended at the lowest point also, by the way. Let's not forget that Jet Airways, for example, DHFL just did not recover. So there were stocks on the downside as well. It's not that, you know, it was just one-way move. But for what it's worth, let's look at the big movers on the index. It was all about financials today. HDFC and HDFC Bank. They were the ones which really led the pullback in late trade, and it got help from Kotak. Maruti made a bit of a move after that 52-week low move yesterday. State Bank, Lever, these were some stocks. HCL Tech, Infosys also moving higher. On the way down, of course, Indiabulls Housing now, it's going down about 5.5%, but intraday, of course, there was quite a bit of recovery that you saw on Indiabulls Housing. And what else stands out? Perhaps Yes Bank. Again, intraday, quite a bit of recovery. It was down 10% at one point, ending down about 2.6%.
Okay, and in the mid-cap market, it's really not about absolute rates. It's about the way stocks recovered from the lows today. So the index is up about 47 odd points, but if you see it from the low, and a lot of mid-caps have managed to bounce back quite a bit. Anyway, I'll start off with some of these housing finance companies. So Indiabulls, of course, housing, the big one did recover quite a bit, but the others still have ended negative. DHFL being case in point. Again, from 30% drop to 22% drop, but nonetheless, it's a big cut anyway. Canfin Homes grew finance down about 4%. PNB Housing also recovered most of its loss and ending around the flat line. Some of the other NBFCs like LIC Housing Finance, M&M Finance, these stocks have actually done well today. M&M really took the top honors, 5.5% up on that one stock. Let's take a look at what really worked out in the market. On the upside, you have some names on the sugar side again, Dwarikesh, Dhampur, Bajaj Hindustan, Triveni, Balrampur. So the sugar rally is sort of moving with a mind of its own. Biocon has seen decent buying today, 6% up on that stock, as has an HDFC Standard Life, 5% up over there. In fact, most of the insurers, let's get the other ones as well, including something like an ICICI Lombard. So these were some of the stocks that managed to find ground. ICICI Pru Life has also managed about a 5% up move. HDFC AMC, so insurance and the asset managers, they found favor today. Let's see what else worked among the larger stocks. Some buying coming in on the likes of an Andhra Bank, some buying on a Chola Mandalam as well, Walk Hard. These were some of the other names that were gaining ground. So this is pretty much the list of winners. Bandhan Bank, something like a TVS Motors found takers, about 3% of an up move over there coming through. REC, PFC, there were some buying trends visible there as well. On the weaker side, Jet Airways has serious problems, 10% down on that stock clearly. Indian Bank again was a big loser, 7.5% down there. So these were some of the names that continued to be weak. BEML and Arvind maybe you can add as well in terms of large non-index stocks that continue to face pressure today. After the adjustment, the mid-cap index is ending absolutely flat, and a perfect 100 on the Nifty after adjustment. Anuj.
Oh yes, perfect 100. 100.05 is what we have, and even the mid-cap index managed to end just about in the green. So let's take final thoughts then. Ashwani, 11,250 is the level that you're looking at now in the pullback, but what's the larger picture now?
See, larger picture is the same. I mean, crude was higher, but the market failed to make a low below, say, Friday's low or today's low. I think below 10,950 broadly. We went below it, but could not sustain. So that way, you know, there isn't enough room to sell from these levels, and hence we rallied. We've closed almost at 11,100. So another 100, 150 points worth of rally can happen. On the Bank Nifty, maybe a bit more, like 26,000 thereabouts. So that way, you know, you'll have a pause in the decline. And finally, once this pause is over, I think we should start to decline again, because the factors haven't changed. Just a bit of, you know, profit booking on the shorts and, you know, a bit of positive news. I don't think CRR cut is coming. So, you know, you can keep making vague statements, but they only impact, you know, at lows. So if you get a decent rally, I think it'll time to get back into shorts. But next two or 3 days could be a bit cheerful.
Okay, Sri, final thoughts with you as well. I mean, since we're still off 7-8% on the indices and far more on individual stocks, what would you buy in this fall?
I think it will be more cautious, Surabhi, to be very frank, because with the fall that you have seen in terms of the depreciation of the currency, the quarterly results will be key to, at least for me for sure, because you know how many of these companies are going to report the impact of the currency, the kind of headwinds that you have got to see. And finally, I would also look at treatment from what's happening on ILFS front in terms of a lot of these banks, especially of the PSU banks. The banks are continuously, again, PSU banks seems to be seeing the pressure. So I don't think that everything is going to be on a broader sense, just by the market kind of scenario. No, it's going to be extremely stock specific, and probably market will become more choosy right now, at least in the near term.
Well, we are rounding in close to 4 p.m. and that means the action should kickstart at the Yes Bank board meeting. The hunt for the new CEO is going to be one of the top focus areas at that board meeting today. Ritu Singh is joining in with more details. Ritu, Yes Bank always ends up giving shivers of late to investors. Suddenly we had that intraday drop as well on the share price. But board meeting, what can we expect?
Well, Surbhi, 4 o'clock is when it's supposed to start, so I'm not really sure what sent those shivers down earlier in the day today. But that said, there are two key items on the agenda. One, of course, is finding a successor for Rana Kapoor when he steps down from the bank as MD and CEO at the end of January 2019. We understand that the independent selection committee will be appointed that will be looking at both internal and external candidates. Among internal candidates, of course, Rajat Monga and Pralay Mondal, as senior bank executives are believed to be, strong contenders. Outside, we don't know yet what names the search committee could look at. And that is one of the crucial decisions coming in from today's board meeting. The second, of course, but even on that, although Reserve Bank of India has the last say, there is a complication where, the amended Articles of Association give powers to both the promoters, that is Madhu Kapoor and Rana Kapoor, to jointly nominate, a candidate for the CEO post if they choose to exercise that option. So it remains to be seen whether or not they will, choose to do so. Second, of course, is the future of Rana Kapoor in the bank. Now, legal sources we spoke to believe that by virtue of, relinquishing his position as MD and CEO next year, he will also give up his position as a whole-time director on the board, which, as per the Banking Regulation Act, if you're removed as a whole-time director, you cannot maintain your position as a director on the company's board. That clashes with the Articles of Association of Yes Bank again, that says that by virtue of being an Indian partner promoter, he's not liable for retirement. So which act prevails, what is the legal opinion, what the bank will seek and what Rana Kapoor will choose to do, that is something that we're awaiting the final word on. But many, watchers believe that this could end up in the courtrooms.
Well, yes, the Kapoor versus Kapoor, we know it's been on for many, many years. But anyway, that's a different matter. Thank you, Ritu, very much for that. Let's just see how this plays out at the Yes Bank board meeting. Right now, moving on to another matter. This is an exclusive story. The government and the EPFO, the Employee Provident Fund Organization Board, have locked horns over the tenure extension of non-government representatives on the EPFO board. Yash Jain is joining in with more details. It's all about, I think, steamy events at different board meetings or different boards. Yash, what is happening with the EPFO?
Well, Surbhi, firstly, let me just put things in context very quickly. Last year, the government had put out a directive which essentially suggested capping the working tenure as far as the non-government representatives on the board of EPFO is concerned. That directive essentially said that these non-government representatives cannot hold more than 2 terms of 5 years each, which is essentially 10 years. Now, as we move closer to the implementation of that directive, these non-government representatives have now started making presentations to the government. They've also started raising concerns with respect to capping of their tenure. What they're saying is essentially that if this particular directive is implemented, then 50% of the EPFO board will have to move out. What that will do is that a lot of experience which these members bring on the board, because they've been holding these board seats since the last 10 years, will move out of the board, and that will reflect negatively as far as the decision making at EPFO is concerned. What they're saying essentially is that, the board members should be allowed to continue with more than 2 terms, essentially more than 10 years, if the board feels they are capable, if they are fit and proper to discharge their duties and actively participate in the decision making. Why this is very crucial is because, the board meeting EPFO has been overdue. Of course, it was supposed to happen last month. It hasn't happened. And a lot of policy decision, be it on the equity investment part, also as far as various other schemes are concerned, are held just because the board meeting is not happening, because the board has to be reconstituted. We'll have to see how soon we get to that point.
And crude oil prices continues to make waves. We have seen a fresh 4-year highs above $82 per barrel for the Brent prices now. This is going to be a 5th consecutive quarterly gain for the crude oil prices. The last time this happened was in 2007, and that really ended up in an all-time high for the crude prices there. Also, the prices are up now 45% in last 12 months. And while, of course, the fundamentals have been on the stronger side, the hedge funds have increased longs in Brent by 44% in last 4 weeks. So clearly, every side that you see, the crude oil prices are getting support from there. Michael Hay, of Global Head of Commodities Research at Society General, now joins us online to talk more about that. Michael, hi, good to have you. How would you read the kind of run-up that we are reading in crude oil prices? And would you say all the factors, the strong fundamentals, whether from Iran, OPEC, US, etc., have been factored in, or would the markets really want to see each of them actually play out?
Hi, good afternoon. I actually think that I don't think the factors have been fully priced in right now. I think obviously the positioning of traders is looking to upside risk versus downside risk. You definitely have more interested in call buying than put buying. In fact, the WTI December 19 call strike, $100 strike, has risen by over 5,000 contracts yesterday, which makes it the 6th largest WTI contract by open interest. So obviously the market is definitely focusing on more upside than downside. However, we would say that there could be even more upside. I think the market is obviously focused on Iranian sanctions and declining Venezuelan output and issues relating to pipeline capacity in West Texas in the United States. And if those end up being a little bit more dramatically different than what the market is currently expecting, you could think about another $15 on top of what you already have here, and you wouldn't be far off the $100 mark.
Well, absolutely, Michael. That's a very, very bullish call that you're giving on crude. But what is your sense on how soon can we see that? What kind of volatility are we headed for, really, for the next couple of months?
So let's just step back and just say what we've just talked about there is a risk to the market of getting to $100. But realistically, these risks are relatively low probability event. In fact, what I've just outlined there about the Iranian sanctions being more than what we think and Venezuelan output declining faster and pipeline capacity taking much longer to come on, we put that at about a 25% probability. So our base case is still for kind of a range-bound $70, $80 Brent market, and that kind of makes sense. If all I showed you was a supply and demand projection table for oil going out this year and next year, you'd say, oh, that's fairly balanced in terms of both supply and demand, even though inventories are low. But what we're talking about here is pretty extensive risk. But what I would say is inventories have declined pretty substantially in the OECD. And if they get to the level where we think they're going to get to, which is something like 5 days below their 5-year average, then you would expect volatility, to get to your question you've just asked, volatility to reach sort of the 40 to 50% level, implied volatility from the high 20s that we're at right now. So a lot of people do focus on price, which is what we started talking about, but volatility should pick up as inventories remain pretty subdued.
Michael, would you call much of this move as sentiment, or do you see an actual demand-supply imbalance being created in the global markets? And what is, how much of that can really play forth going forward from here?
So in anticipation of Iranian sanctions, you have most certainly seen total OPEC crude output increase by about 600,000 barrels over the last 3 or 4 months. So where has that come from? Well, it's basically Saudi Arabia and a little bit from Russia. They're pretty much the only people that can continue to increase output. Because remember, when we're talking about Iran sanctions kicking in, and you've already seen some of their exports start to decline, we're talking about 1.3 million barrels a day being removed from the market that the Saudis have to basically fill that plug because you can't get it from the U.S. because of pipeline constraints. So what's going on? Well, they are managing to balance the market from a supply-demand perspective, which is why you would look at a table like supply and demand for next year and you'd say, oh, it's fairly balanced. But you have to remember that by doing that, by the Saudis filling that void and making supply equal demand so inventories don't continue to decline, their spare capacity declines pretty considerably. And they're the only ones with spare capacity. So that's what the market's really focusing on, the fact that, yes, they can fill the plug. Yes, pipeline issues will start to become a little bit less problematic by the middle of next year. But you run a situation where there's not much spare capacity left should something go wrong, and that's why you've seen prices justifiably get to the levels where they are right now from a supply-demand perspective.
So, since you spoke about on how the prices may soften as we get into 2019, what is your sense, a fair sense really, on the crude oil prices range for the rest of 2018, first quarter of 2019, and then moving ahead in 2019, if you could break it down in these three parts?
Yeah, so basically, I didn't quite catch all the three parts exactly. I think I've got the gist of it though. But what you've seen up, I think, right now is a run-up in prices because of fear of upcoming Iranian sanctions, Venezuelan declines, which are somewhat more predictable in a sense because we've seen month-on-month decline, and it looks like that will continue. But given the fact that these risks that I've spoken to, which is more Iranian oil being taken off the market than we expect and maybe more pipeline issues, those are risks. If we forget about the risks and we just look at what's probably going to turn out as our base case, then prices now for the fourth quarter of 18 should be sort of around the $78 level for Brent, which is about $3 lower than where we are right now. Going into the first quarter of 19 should be somewhere around 73, but on average for next year, we're thinking somewhere around the $73 mark, which is pretty considerably 10% less than where we're at right now. But, that's our base case point estimate as to where we think prices should be based on supply and demand. But as I've mentioned, you could have $15 upside to that quite easily with any of these risks transpiring.
Point taken, Michael. We'll let you go at that. Really appreciate you joining us with your sense on where the crude oil prices could be headed. So that clearly is the view coming in from Societe Generale. One thing that I want to repeat, which he said, was that $100 buy option is the 6th largest contract. So it's not just a number that the markets are talking about. People actually are trading onto that number as well. Okay, Naveen Mathur now joins us to talk about strategies and all of those commodities. Naveen, hi. Good to have you in a very long time, actually. But, the crude oil prices clearly is the talking point right now, and most people seem to be believing that we could see much higher levels from here before we get into that correction. What is your sense? How are you especially trading them in the Indian markets?
Yeah, thank you very much, Manisha. It's been a long time, and I was eager to listen to your voice on the other side. But anyway, the crude is definitely looking to be a bullish call right now. Whatever expectations are with respect to the news items which we are seeing, an escalating trade war, I think the Middle East problem also is creating a little bit of a problem these days. And I think because of Venezuela, the kind of Algeria and all that fundamental news already being there, I think the crude looks to be bullish, but settling down at around $80 for the Brent and approximately $72, $73 for the NYMEX WTI contract would be the kind of a place where people should wait and watch and then look for the overall trend. But overall, with the kind of market scenario, and the dollar looks like to be depreciative, or the weakness in dollar coming a few days and months, I think the dollar-denominated commodities look bullish apart from the fundamental news on the crude. If you ask me for the Indian strategy or the Indian market scenario, the crude on the MCX October contract is hovering at around 5,276. I think the strategy for kind of a day or 2 days would be to buy with a stop loss at around 5,180 and target at 5,320 with the trade to be initiated at around 5,230 or 35 levels. Okay. But overall trend remains little range bound with a bullish tone overall.
All right, so crude is a buy, of course, but are you picking up anything on the metals which could be on a buy side, precious or base, where you see a buy trend really emerging?
I think the buy on the gold side would be good because of the kind of the weakness on the dollar index. I'm not saying from the intraday perspective, Manisha, but definitely kind of a dollar weakness, as I said, would help international markets also, which are trading at around $1,203, $204. In Indian markets, we are trading at around 30,750, 800 levels. I think the rupee, maybe we have seen the turnaround in the market today. The rupee got appreciated just by 2 paisa, although it opened a little weak. But we are kind of a depreciative emerging market currency scenario. So I think the rupee factor would play a very critical role, although that in dollar terms, the gold prices didn't move up to a great extent. They are hovering around $1,203, $1,200. But the rupee playing factor would keep the prices a little bit on the higher side. So we would recommend to go for a buy on the October contract for gold at 30,750. Stop loss at 590 levels, and around 30,900 to 950 would be the targets. Currently at around, as I said, 30,760 or 800.
Point taken, Naveen. We'll, of course, touch base with you yet again. But today's calls are a couple of buys, of course, coming in from Anand Rathi on crude and gold. With that, it's completely out of time on this edition of Closing Bell. But after the bell comes up next.